Learn the art of investing on Moneywise.
To open this podcast, I'm going to throw a line at you. And that line is going to be infused with meaning as we introduce our speaker and get chatting with him. Mutual funds are not a product, but an investment solution. Thank you for tuning in to the Moneywise Podcast. My name is Sheetal, and today's guest is Anup Bhaiya. He is a founder of Money Honey Financial Services. Now, interestingly, Anup has been part of the industry for 23 years and spent a lot of that time managing retail investors' money. And he believes that they do have a grasp of the psyche of the lay consumer. They've seen cycles as an organization, various ones, the IT boom, the burst, bull markets, bear markets, COVID. All of this has really informed the choices that they've made for themselves as an organization and also for the people who've thrown in their lot with Money Honey Financial Services. Now, interestingly, behaviors, according to Anup, vary before investment and after, in good times and in bad times. So we're about to ask him a little bit about this layperson's idea of mutual funds as an investment solution. Thank you so much, Anup, for joining us on the Moneywise Podcast. Welcome, and how are you?
I'm fine, Sheetal. What about you?
I'm fine too. Thank you for asking, and I will be better once you have explained mutual funds to me a little bit better, especially in the context of an investment solution. So, Anup, when it comes to investment advice, right, there is so much of information out there, whether it's in television ads, social media, newspapers, family WhatsApp groups. Also, you have uncles and aunties giving you advice on money matters. But then there is one thing that, generally speaking, I'm sure you'll agree, a lot of people have come around to, which is to say that mutual funds are a smart move for first-timers especially. Would you say that that is an accurate reflection or assessment of what it really is?
See, one thing is clear, that mutual fund is now household name. The way the fixed deposit, which was not the case in, let's say, suppose when I started my career. In 99-2000, mutual fund is like a Greek name. And fixed deposit and government bonds very popular. Post-COVID, if I meet any client, when people come for interviews, they come from all sort of backgrounds. There are a lot of the candidates who came where the parents are auto drivers or a vegetable sellers or a pani puri wala. I'm just saying, in all sort of background. And these candidates have saved their parents' money into mutual funds or have done some amount of investment in stocks also. Maybe thanks to COVID, those options were available. But when I asked them a couple of more questions and deep down their understanding about mutual funds, I found they have a vague understanding about mutual fund. Most of them are buying because it gives more returns vis-a-vis fixed deposit, or it's less risky compared to the stocks. This is as simple as that. That's it. Many won't know why they are less risky or why mutual fund generates more returns or better returns compared to the fixed deposits. So I am not very confident that all first timers, even the experienced investors, have truly understood the power of mutual funds, the kind of solution they can provide, the kind of problem a mutual fund can solve their life or financial related problem. I'm not sure. But having said that, I personally feel whatever the change I can see in the investor, at least the acceptance level and the direction is right. I'm sure in times to come through your mediums, and that's what we are doing. We are trying to educate investor to make sure that they becomes well informed and they exactly know why they are adding mutual fund in their investment portfolio.
We all love to read these wonderful stories about isne itne paise bana diye and complete power of compounding ka magnificent story. Wow, wow, people are like rejoicing. But then when it comes to putting our own money where our mouth is, quite literally, we get skeptical because it's our hard-earned money. So, for the benefit of all our skeptic listeners, Anup, how would you explain the value of mutual funds?
There are many reasons, honestly. These are well regulated. A smart and intelligent fund manager, they comes with a tons of experience. Mutual funds gives you diversification. You have equity, debt, you want gold, you want real estate, you want hybrid, which is mix of everything else, you want index. You have a multiple options are also there, which you can invest in via lump sum, one-time investment. You want to do SIP, which is systematically. You want to do systematic transfer plan. You want to withdraw amount, also systematic withdrawal plan is there. So there are multiple choices of investment amount, investment options. More importantly, it gives you, till today, it gives you tax efficient returns. Like if you invest in a fixed deposit, you have to pay 30% tax. Some of the cases you might have to pay 40% tax. The same client, if he invest in maybe debt funds, he get taxation benefits, indexation benefits. And then if you account that indexation benefit, probably your tax outgo is maybe 10-12%. So it's a tax efficient product. It gives you liquidity. Even if you have a 10 crore rupees of portfolio, and if you want to liquidate entire 10 crore rupees of portfolio, you can liquidate and you can have a money in 3 working days.
Now, a lot of talk about first time, newbie investors and so on. Do you think that mutual funds are good for all types of investors, irrespective of age, profile, etc., or are they better for only some categories of investors?
You have retirement, you have educations, you have home or holiday. You have unplanned expenses, emergency. So all sort of investor, all sort of needs, and all sort of asset classes are also there. So hence I say that, like mutual people comes and say, नहीं यार, एक ही प्रोडक्ट में मैं कितना डालूंगा पैसा. एंड आई फील दैट कि भाई म्यूचुअल फंड एक प्रोडक्ट नहीं है, एक सोल्यूशन है. इफ यू नीड आफ्टर 6 months money because you want to pay some your kids school fees, you just put money in a debt fund, liquid fund. If you want to some money after 2 years and 3 years because you want to have some certain down payments, you invest in a hybrid funds. So answer your question is basically it's available for all sort of investor. It meets your all needs and it gives you pure diversification because it offers all sets of range of products. And hence mutual fund is not a product. It is the investment solution. It provides a lot of solutions to your future needs.
I think you've explained it beautifully to us and in fact woven the topic in with that answer on whether mutual funds are for only one particular type of investor, and the answer is no. There is something in it for everybody, and that's why it's more a solution, not as much a product.
You're listening to Moneywise, successful investment ideas that create wealth. Did you know?
The total value of the world's stock markets at the start of 2022 was $116.78 trillion US dollars. The world's stock markets have grown 464% in 11 years, up from $25 trillion in 2009.
Personal finance simplified, only on Moneywise.
What are the different types of mutual funds?
So, in simple two, or maybe you can categorize at least in 3 categories. Debt mutual funds, where predominantly the investment goes into the bonds, the government bonds, or a triple rated corporate bonds, or certificate of deposit, commercial paper, treasury bills. And then you have an equity as an asset class, where generally now you want to make better return than your fixed deposit. And everybody wants that the higher returns. Now, which asset class has a proven track record? Like almost now we have 42 years of history in terms of our index, Sensex or a Nifty. Now, third category, where you want mix of debt and equity at least. Like whatever that combination. Now you say that I want 65% debt, 35% equity. Is that option is available? The answer is yes. If you want 50-50, answer is yes. You want 80-20, answer is yes. You want 70-30, answer is yes. So that is another hybrid. So in a simple terms, equity, debt, hybrid, these are the 3 products. Another way is basically you have an investment choices also. Let's say suppose someone has a lump sum amount, some $10,000 or 20,000, 50,000 रुपया, क्या वो investment कर सकते हैं? Answer is yes. But someone might not be very comfortable putting most of the time 10-20,000. He is very comfortable putting 1,000 rupees, 2,000 rupees. Those sort of investor also the option is there. Now some people are also very choosy in terms of when to invest, when not to invest, or they may not be very sure in terms of कि market का direction किधर है. They want to time the market. For those sort of client, the STP option is there, which is systematic transfer plan. So you have a variety in terms of product, you have a various option in terms of as an investment.
So basically, one more time, there is something in it for everybody, and 1,000, 2,000, maybe people come and say, "Acha, this is how I want to start." Am I correct in summarizing that? And 10,000, 1 lakh, that's also what happens.
So that's fine. But when it comes to SIP, like people think that SIP is only done by somebody who doesn't afford a large amount of money. मतलब SIP एक गरीब आदमी कर सकता है. I think that is also a wrong notion. So SIP तो कोई भी मान के चलो मेरी तनख्वाह 20,000 रुपया है तो I will do maybe 2,000 rupees, 5,000 rupees SIP. अगर आपकी तनख्वाह अगर 5 लाख रुपया है तो आप तो लाख रुपए का भी SIP कर सकते हैं ना.
तो आपके मुंह में घी शक्कर 5 लाख. So come back to the point. Yes.
So it's not only it's not mutual fund. SIP is a poor person product and not rich people cannot do it. So that may not be, again, is not the correct notion out there.
But here's the other thing, you yourself have been part of this journey for over 2 decades, Anup, and as someone who goes out there in the real world and has met people and has had these stories based on the investment decision that people have taken, I'm sure you have a lot of wisdom, right, that you got from those. It reminds me of all those stories with Thirsty Crow, Khatte Angur Ka, whatever the story. So there'll be real life examples and then there is a moral of the story. Do you have a few of these that you can share with our listeners today, Anup?
So there are two stories I will give you, and one moral of the story will come as a compounder, and second is basically when to plan your retirement. Okay. The first story is more of if you don't plan rightly, like if you don't practice as a compounding, then you will have to compromise in your life. So there is one client who used to work in a government organizations and he got retired in 2012. While discussion, he said that one interesting thing, he joined 40 years back when he just started his career in between 1975 to 1980. And that time he decided that boss 10 lakh रुपया भी अपना अगर corpus बन जाएगा ना, अपना retirement set हो जाएगा. So you just need a 10 lakh rupees of corpus. And life will be set. Come in 2012, his annual expenses are more than 10 lakh rupees. Okay. तो जो बंदा 1980 में सोच रहा था कि मेरे पास में 10 लाख रुपया अगर मेरा रिटायरमेंट के टाइम पे रहेगा तो मेरा लाइफ बन जाएगा, आज ये नौबत है कि उसका एक साल का जो एक्सपेंसेस है, बेसिक एक्सपेंस है, वो 10 लाख से ज्यादा है. So if you would not have invested in equity sort of product where it generates more than inflation, the returns what it get delivered, your corpus would have been soup. Then at the time of retirement, you would have compromised your lifestyle, आपका purchasing power, it have been deteriorated. So this is one thing I would want investors to start their investment and put money in an equity which can help them to make sure that their future purchasing power, their standard of lives are protected. Number one. Number two, majority of investor who comes to me for a retirement planning, they come at the age of 50 to 55 and they wanted to retire at 58, 60.
Okay.
Now, how come it possible that you are just going to retire and now you want to start a retirement planning? You want to start a retirement planning at the age of 25 or 30, not at the age of 55.
Right.
So this is the very common problem or common observation I can see. My message is to all your young listeners is basically start planning now. At your young age, don't come at the age of 55 and say that now you want to plan your retirement. That may not be the right time.
I hope our listeners have made notes in these two stories, because I think valuable lessons from your experiences of the power of compounding and also how to actually plan for your retirement. There is such a thing as a good time to do it, and now is a good time, better than tomorrow. That's what I'm taking away over here. Anup, I think you've hit the nail on the target on the head when it comes to mutual funds being an investment solution, the solution that takes us closer to our dreams. And we must thank you for joining us and sharing the wealth of your experience with our listeners on Moneywise today.
Thank you, Sheetal, for giving me this opportunity and sharing my thoughts. Really appreciate your time.
You're listening to Moneywise, brought to you by IDFC Mutual Funds. Check out the rest of our series for more investment advice. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.